Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Hello and welcome back to the Ask Ralph show. One of the things that I get asked a great deal in my practice is this whole discussion between independent contractors and employees. And I've done some topics on this. I've had some questions asked by people who are interested in the show. But I thought I'd take a few minutes today to really talk about this because it's something that can really cause problems in your business. Now, this is not just information for our people who are employers, but it's also for employees. So you need to think about, are you being classified incorrectly by your employer? So basically the bottom line is currently the likelihood of your business being involved in a worker classification or employment tax audit is increased. And that's because the IRS is aggressively attempting to reduce the tax gap, which is the annual shortfall between taxes owed and taxes paid. And because the existing worker classification rules are complex and ambiguous, and I mean they are ambiguous, much uncertainty surrounds their interpretation and application. There is a definite lack of a single definitive test for classifying workers as either employees or independent contractors. So that is really contributing to this classification problem. So therefore, it's really important that you understand the difference between an employee and an independent contractor. If you are an employer, you're required to withhold and contribute a matching amount of FICA, Social Security tax, and Medicare taxes from your employee's income. However, if your workers are independent contractors, you are only required to report payments of $600 or more on a Form 1099. A lot of people know this, 1099 miscellaneous. Failing to make the right classification could cost you money. So this is important. If you have workers who make substantial financial investments in tools, equipment, or a place to work or undertake some entrepreneurial risks, they are probably independent contractors. Let me rephrase that again. So if you have workers who make substantial financial investment in their tools, so they use their own tools, they use their own equipment, or place to work, or they have a place to work or undertake some entrepreneurial risk, they are probably independent contractors. However, when you control and direct the workers who perform services for you as to the end result and how it will be accomplished, you are probably involved in an employer-employee relationship. This is important. Unless there is a reasonable basis for treating your employees as independent contractors, failing to withhold income and employment taxes from their wages can result in severe penalties and interest in addition to the back taxes owed. Of course, penalties for intentional worker misclassifications are harsher than they are for inadvertent mistakes. But now see, with the IRS really cracking down on this, the idea of using an inadvertent mistake is difficult. Here's another problem. Your benefit plan may also be in jeopardy if any eligible employees have been misclassified as independent contractors. Since these employees have been excluded from plan participation, your retirement plan may lose its tax-favored status. The problem is compounded when excluded employees seek restitution for lost benefits, not only due to their exclusion from the benefit plan, but also for health coverage and other employee benefits. Now, the IRS does offer an amnesty program to eligible employers that have misclassified workers. This program is called the Voluntary Classification Settlement Program, or VCSP. It allows employers that are currently treating their workers or class or group of workers as independent contractors or other non-employees to prospectively treat the workers as employees at a cost that is 10% of what would normally be owed in a worker misclassification situation. In addition to that, a safe harbor rule known as Section 530 provides relief for employment tax obligations with regard to workers, even though those workers may be common law employees if certain requirements are met. Since this potential liability is considerable, we feel that it would be beneficial for you to verify that your workers are properly classified. So you want to make sure you take a look at reviewing your employment tax records and procedures to ensure that they're in compliance with IRS guidelines, especially in the event of an audit. So if you're audited, this is one of the things the IRS is going to look at. They're going to look at and say, okay, are these people employees? Are these people subcontractors? As you probably know, compensation paid to certain workers generally considered non-employees is not subject to income tax withholding. So what are some exclusions to this? Now, Qualified real estate agents must be salespersons or persons who recruit, train, or supervise salespeople, licensed real estate agents, and compensation based upon their sales or other input rather than the number of hours they work. So that is an example of a non-employee. Another example of that, direct sellers must sell or solicit the sale of consumer products to a customer or to a buyer for resale in the home or other non-permanent retail establishment. Workers who perform services related to the delivery or distribution of newspapers or shopping news are also considered direct sellers. So you have to take a look at, do you qualify under that? Do your employees fall under that? Now, sometimes you'll have an even more interesting classification. So we've talked about independent contractors. We've talked about employees. Now let's talk about something that a lot of people don't know a lot about, and that's a statutory employee. As you probably know, sometimes workers are specifically designated as employees by the Internal Revenue Code, even if the facts do not suggest an employer-employee relationship. The following types of workers are considered statutory employees. Those would be full-time traveling or city sales representative, agent drivers or commission drivers, life insurance sales representatives, and home workers. The thing you need to know is there are distinct rules for each worker type, and their employment tax treatment also varies. In addition, statutory employees must personally perform substantially all of the services required under your contract. These workers cannot have a material investment in your facilities, and your relationship with them must be ongoing. So this is a complicated area, but it's something you need to take a look at and see, both from the employer standpoint and the employee standpoint. Now, a real simple rule that I always tell my clients is that a person is a subcontractor if they have their own tools, they have their own license and insurance, and they are not directed in how to perform the work. So a great example of that would be, let's say that you are a business and you bring in someone to handle your computers. Okay, so you're going to bring in a computer technician. That person is not going to be working for you because they're going to bring their own tools. They're going to bring their own laptop. They're going to have their own business license. They're going to have their own insurance. So that person is definitely an independent contractor. So therefore, when you pay them, they are not going to be subject to that Social Security and Medicare tax. Now let's turn this around a little bit. And let's say that you hire somebody. I'm going to use the word hire because I'm going to break my example right away. But let's say you hire somebody to work as your front office receptionist. And you say, well, they can come and go as they wish. They'll do what they want to do. Obviously, that is an employee relationship. They don't have their own tools and insurance. They don't have their own business license, and they don't direct, their own work. And it's all about, do you want to match their Social Security and Medicare? And it's a trap that you don't want to get caught in if you're not aware of what's going on. So if you have more questions about this, contact an accountant, contact an attorney, and talk about the appropriate classification of workers. It's really important and can result in substantial penalties and fines if it's not handled correctly.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.